Good morning and welcome to Trading with Larry. I'm back in Boca Raton in my office. It's been a while. I was away for about 10 days. I'm back now and I'm happy to be back as the Nasdaq made an all-time high yesterday. Incredible. From over the weekend fear and panic to one of the greatest markets of all time. The level of complacency is extremely high. The retail public is very, very, um, very bullish. And
And very vindicated.
well, I mean, I don't know, vindicated. Hold on. I don't know, vindicated, but I would say that it's just amazing that, listen, I mean, I got a lot to talk about today. One is valuations. Valuations of pre-public deals have now exploded. You know, they're talking about bringing Ripple public for $100 billion, which is more than the value of Coinbase. Um, we've discussed Circle, and Coinbase has a $90 billion valuation, and probably a little more than 90 billion, and it's insanity. I mean, Coinbase was a $30 stock last year, or the year before. I think it was last year, um, early last year, and now it's a $400 stock basically. And I saw upgrades to 500 or 600. It's an insatiable appetite to buy. It's interesting from Sunday night's opening print to today, the S&P futures are up 250 points, which is over 4%. And let's talk about what really happened. What happened here? Okay, they're coming out today. I saw this overnight. Um, I happened to be up. They're coming out with reports that we didn't even do real damage to anything. So I know, it seems like it was the greatest thing ever. But how are people okay with us not doing damage to anything? They set the nuclear capacity, or whatever, back 2 months. 2 months. That doesn't sound like a lot. So I know we have the ceasefire in place. I mean, listen, if you really want to know, the thought from me on that is the ceasefire was irrelevant because Israel was destroying them, and it was just a matter of when they were going to stop. So they have a ceasefire. Iran, we waited on Iran since the hostage crisis in like 1984 or whenever that was. Um, and maybe it was a little earlier. We waited on them, never even went in there. We should have went in there in 1985 and got our hostages back and destroyed the country and took out the leadership. Okay, I was looking at all this footage of Obama talking and Bush talking, and the nuclear threat and this and that. There was never a threat, and we were like, we never did anything. And then Israel opened the doorway, and basically it was over in one day, or whatever. And now they can't do one thing. They're not doing anything, you know. And then I'd like to ask you, what is this signaled attack? Like, are the people there so suppressed that they don't realize that they got their, you know, butt kicked, and that
Well,
they
they
didn't
shut off.
even.
They shut off the internet.
I
There's no internet.
understand. And how are they getting anything? How are they even knowing what the retaliation is? What I'm saying is they're coming up and they're putting out pieces that they struck U.S. bases with 20 missiles and this and that, yet they called up us in Qatar and told us it was happening. Is that actually real? I mean, hey guys, we're coming with a couple of missiles. Just make sure you're out of the way. I mean, come on. And then, the whole thing just seems so orchestrated, and the market is having an unbelievable reaction to this. And markets are at all-time highs, but I see a lot of things here that look interesting. Like, listen, I'm happy. I buy pre-public deals, so I own a bunch of deals that are not public yet, and the valuations have exploded in about a month. tripled. I mean, this is you know, this is a contained market that is over long, that they're able to keep pushing it up on very light volume and not a lot of volatility. And volatility is 17 across the board, okay? But it really feels like a lot less. So like yesterday was up 50, 60 spook points. It was torture. I mean, it just sat there all day. I don't even think we had a 20-point reversal or a 15-point reversal all day. What was a good trading day was Monday. I mean, that was a great trading day. We we were down overnight. We went positive. Then they had the missile attack. We went negative again, and then we exploded right on the missile attack, $80. So, I mean, that's a good trading day. What we're having now, and you could take a look at the straddle, I don't know if you have, is very, very, very complacent markets. I looked at, a put spread lower in the market, and it was so cheap that I couldn't believe it. So I don't know. I mean, it seems to me like we're priced up for perfection. Everything is as good as it can get. And
Where do you think the straddle is?
straddle is probably under 30. That's what I think.
Yeah. So where is it?
I don't know, 25.
Less.
I mean, that's absurd. That means we can't even go down $20 on the day from where we are now.
It's
That's,
a
I don't know. It's not 20. I mean, that's the lowest straddle of all time. If it's 20,
22.
22, whatever. I mean, that's a joke. That's a joke. So basically, markets are complacent, grinding higher, not a lot to do. Um, you know, all news ended up to the positive side, but now what's the next step on a news cycle that could happen here? Like I don't
That's a
even
good
know.
question. You have a 22 straddle, and like you said, it's like trading is kind of where is it with the 22 straddle? At the same time, okay, you load up on put spreads. It's still a headline driven market. Anything could come out at any point and render that 22-point straddle completely, like moot. It's
Yeah,
just
but
it's
let me ask you a question. I agree in general, but what I just asked you before, and I'm going to ask you again, what could come out? Like there's nothing that can come out.
yeah,
The
it
only
is.
thing that
Right
can come
now,
out,
yeah, I mean
the only
the
thing that can
market has climbed every brick in the wall of worry, catapulted above it like an
What do you mean?
Olympic champion.
The brick, Eric, the brick in the wall worry has taken us higher. Okay. Anytime the reason why the straddle's 22 is because the short base isn't in the market right now. So they can't catapult it because there's no shorts left. Okay. Everybody is long the market, and the market slowly grinds higher every single day. So there's no, like, Monday was very interesting because we should have opened down 100 handles, and if we did, I was selling down there because I thought the news was fairly negative. Okay. We only opened down 60 and rallied straight up. So that being said, the market the market had only one way to go, and then they had the head fake in the middle of the day that got everyone short again. Okay. And then they ripped everyone. But right now it's I don't know. Coinbase is $100 billion. Meta's at a world high. Every stock's at an all time high and ripping higher. Like, I don't know. I mean, are things really that good? I mean, I listen. Are tariffs off the board? Where are the tariffs? Doesn't he have to make a decision the next week? What if he's actually going to? I mean, he's taco, except for the one strike, which Israel basically opened the door for. So the bottom line is, they don't even think he's going to tariff. They think he's going to push it off again. I mean, that's what the market's telling me because they don't seem to be afraid. And the market is slowly grinding higher, and it has no
I don't know. I
sell.
mean, I don't know about that. China, the deal that they had with China in London, um, tariffs stayed in place. The market rallied anyway.
No, they took down tariffs by a
No,
lot.
they
Yeah, they did. They were 150. They went down to 30 on top of 20 or whatever, or
Yeah,
25
the
on top of
150
20.
was the first. I'm talking about what happened in London. Trump even tweeted. I mean, we're tariffing them at 55%. They're tariffing us at 10. Go USA, something like that.
I don't know if
Yeah,
they're tariff. I
tariffs
don't think
on
they're
China are still.
tariffing. I don't think they're tariffing us at 10, but we'll have touchdown T check that out. I doubt that is that is what if they're tariffing us at 10, why do we even care? That's an odd lot. It's not even anything. I would think their tariffs are
That's
higher.
my point. Market just.
But I don't
This is
want to
all
listen.
fake
I don't
news.
want to
This is
get back.
fake.
I don't want to get back. I'm having a flashback. Okay, I don't want to get back into this whole thing with you where you think that they're buying our goods. Whatever. That's never happening. So, tariffs are, to bring in revenue for the United States. If he takes the tariffs off or, doesn't have them as he does now, it doesn't benefit us. We need revenue. We need to fund our debt. It's funny. I went by the national debt clock when I was in New York City. It's the most amazing thing I've ever seen. It's exploding up. So it's pretty crazy. But overall, I was looking yesterday, and
I thought when Trump would come into office, that debt clock would start going the other way.
I don't see any market to really do it. Gold's not good. Gold's bad. Okay. Oil is rallying a tad bit today, but looks horrendous. Okay. Um, Bonds are, you know, coming to the lower level. 4.25 will be the next level, but all these levels, whether it's 4.25 or 4.5 or 410 or 430, these levels are extremely high. And now the Fed, for whatever reason, is opening the door for the July rate cut, which by then the stock market will be at a gazillion, and I don't know why they would cut. And they're expecting inflation here, but the commodities and raw goods that we're looking at have all come down significantly in the last couple of months. So how are they going to get inflation hitting? You know, I mean, I don't think they're going to get it. So we'll see if they open the door for that cut. Um, and really, like you said, the straddle's $22. I've never seen that. It's the lowest straddle that I think I've seen almost ever, especially now that the product is 6,000. Okay. We're at a 60, we're almost 6,200. So each 1% is 60 handles. I mean, how could this thing price in a 30 basis point move today? It just doesn't even make any logical sense. But somehow they're doing it, and they'll probably be right. You know, I mean, I don't think they would. I wouldn't come near, selling that. But what's interesting is for our spread product, LSP, we're making a comeback. We've cut our deficit in half over the last couple of weeks, and we're going to probably be positive. But like, do I have the guts today to go in and sell a put spread or a call spread $30 away from the market for $1.50 or $1.80? The answer is I don't think so. But those trades have worked out, for the last week and a half. I think I don't see I don't see a sign or a reason why anyone is selling. There's no one selling. If you didn't sell down 30%, you're not selling here, even though I am fully convinced that we're going to be down and down decently on the year. I don't know if there's going to be a catalyst event. I don't know if it's going to be profit taking, but right now, this is year 3 of this move, and the market has just come back and come back and come back. So, that's what I'm seeing here. It's just, to be honest with you, it's an amazing move so far. And
Well, the seeds are planted for seasonal sell off in like October, I think, or something like that. End of September. Powell was talking yesterday, and he basically squashed the idea of any kind of rate cut in July. I don't know why people were thinking there would be a rate cut in July, but he squashed that, and he's talking about a lag effect to inflation, which I actually agree with. I think that trigger that could create a sell off is going to be inflation, interest rate related, but not right now. Not right now at all. So yeah, he was really hawkish yesterday, and the market just ripped right through his comments, and that's going to be an issue down the line, but
You
not
think he
yet.
was that hawkish? I didn't.
Yeah,
I
I
don't
do.
think
I think he
I
was.
don't think so. I
I
don't think.
think in general, the Fed turned incrementally more hawkish at the last meeting.
What do you mean? Every single Fed guy that has come out has basically said we're going to have a July rate cut. Waller, etc. All
A
those guys.
July rate cut?
Yeah, July. The meeting is actually, when the meeting is, it's basically the end of July. So they have a full month, and they're saying the door is open if inflation stays where it is. So it wouldn't shock me. I
Yeah, but
don't.
the composition of the dot plot changed where like half of them are now thinking we should have no rate cuts at all this year.
Well, I heard him say that there are people that think that they should raise rates. I mean, that I was like shocked. He said there was, partial, you know, thing. I forgot what they call it. It was some kind of metrics or whatever they were looking at, and it actually called for a hike. They don't know what they're doing. And the funny thing is, do you really think tariffs are in the market right now? I don't see tariffs in the market. Like, I don't feel no price. Like, are the European car tariffs in or out? I don't know if he halted those or he didn't. Nobody knows what he's doing, but I would say that none of these European car companies have raised their prices. Mercedes hasn't, BMW hasn't. So if they are getting tariffed, they're eating the tariffs. So it's really not affecting us on the inflation front because prices have remained exactly the same. So, we'll see, how that all shakes out. Right now, we're in the froth.
Well,
Valuations are.
where you see it, I just want to share this chart with you. This is where we don't see it because the companies are, I think they're eating the cost, but internally, uh, this is a good measure. I think it's the producer price index. It's the CPI less the producer price index. When when this is green, that means that companies' profit margins are doing well. So they're bringing in more than they're spending, and since those tariffs kind of kicked in right here, you're seeing uh, producer prices really uh, dig into those margins. So there's a lag effect to this too, and so that's where you're seeing it. I think for right now. But again, there's a lag effect to all this, and the market just doesn't care about it and kind of looking through it. But at the same time, you have a Nasdaq at 28 PE. You mentioned valuations earlier, uh, and there is some margin pressure, but the market is just looking at the next phase of tech now and the next phase of AI, and which companies are going to offer applications that are using AI, robotics. They're getting hyped up. So there's
Yeah, but
probably going to be another
it doesn't
couple of months.
scare you. It doesn't scare you that everyone that I know was long, pretty big Mag 7. Mag 7 collapses 30 to 40%. Okay. No one sells one share of anything. And within a month, they're up money. Okay. And now they're up exponential money. Okay. Because the market, markets are up a little on the year. I think S&P is up 4. And in that area it's not up a lot, but these stocks have exploded. Okay, so Why would anyone ever sell? They've been rewarded and rewarded and rewarded over and over and over again. And, it's interesting to me. And the reason why I started my service was I thought it would be very advantageous for retail customers to, and people that are not professional traders to learn and trade alongside somebody that, does this for a living every single day for 30, 40 years. And the funny thing now is none of that really matters because you're in this environment where every day someone's calling me with another crazy stock that's up like 40% in a day or whatever. And that's the market we're in right now. So we have an insatiable appetite to buy. Market continues higher. Look at this quarter. I mean, what are we up for the quarter? It's got to be massive. I mean, I know we rallied probably into the end of last quarter, but we're having like the most massive quarter we've had in a long time. And, I'm not really sure why. And the thing is, think about this. Israel was fighting with Iran. Do you really think that has any meaningful impact on us? Really? I mean, really. And then that war was basically over, okay? And then we get involved and our market explodes up and we don't even know it's day 2 of this, ceasefire, okay? You've been down this road a million times and it's eventually not going to hold. The only reason why it may hold is because Iran is decimated. They got nothing. They can't even shoot a bomb off. So it would have to be done through some kind of terrorist attack or something like that. It's not coming with missiles. They're never shooting any more missiles. They decimated that. No one wants to take the chance to even shoot it off because they're going to get killed. So that's really what's happened. And we have a ceasefire, and the market has, we supposedly took out their nuclear capacity, but now they're looking for the enriched uranium. They don't even know where it is. Okay. And they've said that now they haven't, the one of the facilities they basically barely touched, and the other, basically the other two are hit but fixable very quickly. So what I'm asking you is what, so other than the insatiable appetite to be long and buy stock day over day over day, what is, just explain to me what is out there that's so good. Like I'm trying to get it. And I understand it. Price is price. The beauty of the stock market is the price tells you what is happening, but I'm just not seeing it. And then there are a lot of trades outside of here that don't make sense to me. Like the dollar, why is the dollar so weak? The dollar is
Yeah, the,
literal.
the dollar looks like it even wants to go lower, right?
The dollar is garbage. Okay, I'm long it, but we were doing well, and then all of a sudden on a dime on the terrorist on the ceasefire, the dollar gets weaker. Why would the dollar get weaker on that? It's weird. We've shown everybody in the world who's the biggest, baddest person in the room. It's us. We're showing off our military might, etc. So that's where we are at. But
I just think the dollar is operating on a different kind of narrative. I think I think the dollar is. I think there's two things happening in the market. There's the short term picture where everybody was concerned about the Strait of Hormuz. That's gone. So the VIX is coming off. A lot of that, um, a
yeah,
lot
but
of
let
that
me let me
VIX is
let me
coming off.
call.
The market is now going up. I think as a result, I think that's more mechanical. You have the Nasdaq at an all-time high. Maybe there's a domino effect. Maybe S&P follows. But side by side to that, you still have this deglobalization theme that really kickstarted as Trump announced tariffs, and you could still see that in the dollar. The dollar never rallied. It's so you have these two. You have like a short term theme, and then you have like a longer term macro theme working side by side right now. So maybe it just looks like 2018, where you start off the year with complacency, you have a big vol event, it comes right back, trickles up into the fourth quarter, where then the market starts battling the Fed and sells off. So for right now, I think the trajectory between 2018 and 2025 look pretty similar.
All right. I mean, I haven't looked at that, and I really don't like to like compare different years. For me, it doesn't. Every year is different. Every
Yeah.
market is different. I mean, the S&P might have been at friggin' who knows where, 3,000 or lower. I don't even know where it was, but it's nowhere near where it is now. Okay, you have very stretched valuations, but you have a market right now that's just grinding higher, doesn't care about anything, and wants to just keep going up. So you can't really get in the way, and it's an easy trade. It's just, for what I do in our products, there's not enough in this move to really make money. Yes, there was from the low to where we are now was an amazing move. It's probably one of the best moves we've ever seen. We caught a little of that. Then we got short, got no mean reversion. Haven't added to positions in months. Literally haven't added to the short in over a month. Um, Trades have been very light. I hope people out there that are watching respect that. Our book is only three positions or four total through our whole book, okay? Because I don't see a trade and I'm not getting short until I see a trade. I can't buy the market up here. There's not enough in it from these levels for sure. There was probably enough in it you know, 3 weeks ago. But I didn't think we were going to have this type of extension. But I feel like, the days are the same. We're going to have tiny S&P volume, E-minis. We're going to have no volume. Okay. It's going to be terrible. Okay. It's low volume, low trading, and a grind higher. Maybe they'll sell it off, but it's highly doubtful. It's highly doubtful. There's no one that can sell. Everybody's blown up and broken. So, markets sitting at high levels. The one thing I'll say, and kudos to them, and they're my subscribers, and I'm very happy. Retail is bigger than hedge funds. They may not have as much knowledge as hedge funds, but they're bigger than hedge funds. They can run you saw it AMC and GameStop a bunch of years ago. You could see it right here. No one, the hedge funds just say, hey, retail's buying, let's just buy, you know. But I don't know what retail thinks they're going to make from these levels. You just missed a 35% move in a month and a half. I mean, this is an epic up move. You if you're buying today, you missed the move. I mean, you may get a little more, but you missed the move, and everything is priced for perfection. And right now we're having a little bit
They
of a
don't.
buying
They don't
rally.
think. They don't think like that. They don't think, "Oh, I'm the market is up 35%. Why would I be buying here?" That never crosses their mind.
Why though?
It's a
Why
good
wouldn't
question.
that cross anybody's mind? I mean, isn't price the determinator of everything? I mean, you're not getting
FOMO.
another 35. You're not even getting another five,
They're
probably.
emotional. They're highly emotional, and
I
that's
find
part of
it,
the market.
Eric, I find it the total opposite. I see no emotion in the market. I see the retail is calm as a cucumber. They just want to buy every day at every price. So when you say it's like emotional and they're fever pitched, I don't see any of that. I really don't. I mean, I see some stocks having outsized moves, but um, you know, um, overall, I don't see this. Um, I see them calm. I don't see retail acting like retail. And the reason for that, Eric, is because they never sell. So it doesn't matter. They just open the brokerage statement and, other than the hiccup in March, which they didn't even probably get the statement, um, they don't care. They don't care.
They
It's an
don't.
amazing. It's it's an amazing market. It's literally an amazing market. And it continue to go higher. The bottom line is, I'm going to watch it from the sideline, but I tell you, we've talked about this for months and months and months. Nothing external to the market matters. It's just buy, buy, buy all day, every day. And, the NASDAQ is just incredible. I mean, the NASDAQ had over a 30% sell off, okay, and it's rallied back over 30, probably 5% in a month and a half. Market average is what, seven per year over the history of the market. So it's rallied 5 years
I
in a
got
month and a half.
9%. Yeah.
No, I don't think we average 9%, but if we do, everyone should buy the market. Okay. I think we average about 7% over time. And then you got to account for when the market goes down, you have to get back to the high water, whatever. So let's, say it's 7. I'll give you 8. Okay. We'll go in between. Okay. So we've had a 5-year move in a month and a half.
This
Okay.
is my
That
job. I'm just trying to get you more bullish.
May. I'm not anything. I'm
Started with seven
literally
percent
I'm
average
I'm
return.
on
Now
the
you're at 8.
sideline.
Now
I'm
you're
on
at
the
8. That's good.
dude, I'm on the sideline just waiting it out. I'm waiting it out.
Oh, you're going to
Waiting,
get your opportunity to completely short the crap out of this market. You will
well,
get that
sure.
opportunity
Well,
this
here's
year.
the thing that people should understand that are watching and that subscribe with me. We're up on the year. Other than the spread product, we're up on the year on everything because we killed it in January, February, and March. Okay.
And by the
We were
way, congratulations on that because you've been bearish as a bear can be. If they had like a country for bears, you would be the president. And
but
yet,
I am not
on the
right.
trading side, you were able to maneuver around that bearishness.
Well, I'm
So
not maneuvering. I'm just
pro
watching.
move.
I'm watching from the sideline. I mean, I have 2 shorts on, but they're three. Their options were $3, and we're going to probably lose the $3. But that being said, it happened last year when we cracked down. We killed it when volatility spiked. When you had your day, you thought the market crashed in July or whatever that was, um, about a year ago. Um, you know,
I came
um,
running to you in tears. I'm like, Larry, it's 1987 all over again.
you did. I mean, everyone. I mean,
You
come on.
looked at me with a
But I
professorial
think the
look,
greatest one of the,
like I was there in the pits in 1987, my
I
young
think
man.
I was. But let me tell you what. I think one of the coolest things was Jim Cramer on the dead low on a Friday night said the market was going to crash over the weekend. And then that was the dead low. So, and I'm sure if you watch his show, he's bullish, but you got to remember that the guy, was dead bearish, freaking out. The bottom line is what I want to leave this podcast with today is the retail public never sells and they always hold and they've always been rewarded. But here's what I equate this to. Okay. And this is what I mean, this is a financial market. It's rigged, it's pretty rigged by the government, by retail, etc. It's a rigged market. But if it wasn't, let me ask you a question. How many people could do the job that you do? Not a lot, right? You're up all night, you're trading, you're watching markets, you're trying to make money, da 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 da, right? It's like being a brain surgeon. Could I walk in today and operate on someone's brain? No, I'd probably kill them. Okay. The bottom line is everybody and their mother is a stock genius and a professional trader. And that is what worries me.
It,
Everybody is a genius.
I'm
I'm
over
telling you,
that.
an
I used to
absolute
care
genius.
about that. I used to care about that. I'm over that. I used to
I'm
think
not
just like,
over it. I'm
out
making.
today.
I was
And I
just
used the
making.
same analogy you did. Would a doctor, would a normal person operate on another person if they don't know what they're doing? But you know what? They've become self-educated after COVID. They have so many resources available to them. They actually
Time out.
sometimes sound
Time
kind
out.
of
Time out. How are they self-educated? It took me 10 years to figure out
They're
what was going
subscribing
on.
to stuff like you. That's the whole thing. They're subscribing to the op trader. They're subscribing to other services. They're getting, they're learning. They're seeing how you trade, and through like the process of osmosis, they become smarter. They pick up on things, and
You know what? You're making me laugh. I appreciate that thought process, but there's no chance. Okay, there's no chance. Okay, let me tell you what. I was talking to one of the best traders that I know in the world, successful for 40 years of trading highly, and you know what he told me? He told me the door is going to close. He goes, it's going to be like a vault, and none of these people are getting out. He said, he doesn't know when that's coming, but it's
they
going to be like a vault closing, and you're never getting out. And, people there that are watching, the beauty of what we do is we do defined risk strategies, and that's the key. So we don't have to worry about getting out. Okay, we basically have the ability to get in and out, um, you know very easily because we're professional. But when that vault door closes, and I've seen it happen before, it's going to be Armageddon. But my question is, this is what I don't understand. Everyone calls me and they're like, oh, I'm long, I don't want to sell, I don't want to pay taxes. I mean, why not I always wanted to pay as much taxes as I could. I would, if I had to pay X in a year, I was happy. I wanted to pay tax. I wanted to make a lot of money. Like, people here, they don't want to pay tax. They want to hold positions. They want to average. They don't want to lose their stock. The market is so over. I'm telling you, it's overdone here. It's overdone. Everybody is laxed. They think the market can only go one way, and it's come on. I mean, listen, we blew up Iran or whatever. We struck Iran. Okay. It went well. Okay. We got the ceasefire. Those are all good things. But the market had exploded. Back in our day, we would sell that news. That would be like, that's ridiculous. Okay. Now the only thing that can happen is a violation of the ceasefire. And the next thing is that we didn't do as much damage, or we didn't knock out the nuclear capacity, which I was shocked that the market didn't sell off overnight when they said that the bombs did nothing. It didn't even penetrate into the facility. So, I mean, that's bullish. What's bullish about that? Trump said it was total annihilation, and it wasn't. So,
all the market cares about with the Middle East is whether oil will get disrupted or not. That's all.
what is the difference? It's at $65. Do you understand how this commodity, you're looking at it? And I don't even know, we got to get close to wrapping, because we're running deep. But I just want to, discuss this for a minute. Crude oil is the cheapest commodity out there, bar none. Nothing is even close. Okay. 20 years ago, oil was higher than this. Okay. 30 years ago, it was higher than this. You have a commodity that's lower in the last 30 years. So why is oil so impactful to you? I don't understand. Like, okay, they disrupt oil. Where's it going? 80? I've traded oil front month at $160, and that was 15 years ago. This thing has never gone up. This is not an impactful trade. Like, you're worried about them blocking the Strait of Hormuz or interrupting oil. So what? Where's it going? It's not so it goes to 80, 90, 100. That's nothing. This stock market has handled $160 crude. Okay? I remember when it went to 100, everyone was like, "Oh my God, oil's 100. If it breaks 100, the stock market's going to crash." Well, it blew through 100. Stock market didn't crash. Stock market probably rallied, and then it went to 120, and the stock market still rallied. So I'm trying to understand, like,
Yeah,
what
it's because a lot of people in this industry get paid for their opinion, so they got to have one.
Eric, but you just said like you're worried about them blocking the Strait of Hormuz, or it's not going to do crap.
I'm not worried about anything. I'm just
No, I'm just
referencing
saying.
this
So what
market
if
and trying to
oil?
figure out what do people care, what I care about, and
Eric,
what the
they
market
don't
cares
listen.
about.
We're
Are
gonna
two
leave
different
it.
things.
We're gonna. I need to wrap. I got a ton of things to catch up on here and get ready for the opening for my subscribers. But the truth is, you brought up a good point. The market doesn't care about anything. If oil went to 85, it would still rally. It doesn't even matter. And it would probably rally more because they'd say, "Oh, higher oil prices are good." I mean, come on. This is I'm not calling it like a bazooka bubblegum bubble, but this is a inflated bubble. It's a slow bubble. So remember when you were a kid and you blow a big bubble and it would be massive, right? And
Yeah, I still
you'd
do that.
wait for it to pop, but it didn't. It kind of like deflated. That's this market. It's not one of those, hard bubbles where you just pop it and it explodes. This is those bubbles where you blow it up and it's like a hot air balloon and that's the bubble we're in. It's a different kind of bubble. It's able to hang in and have very low volatility, and as the market goes higher, the vol keeps coming down and there's less fear in the market at higher prices. It's very strange, but I'll give you a second to wrap, because I got to get going here. So you can wrap us today, um, and I'm done.
So I don't think it's a bubble. Uh, for there's an exact definition of a bubble, and it's when one of the things is it needs to pervade society, where the plumber, the taxi cab driver are talking about this. I don't think there's that level of excitement in the market. I think the
Okay.
market is operating on two narratives. You have a short-term narrative where people are looking at incremental, is the news flow incrementally good or bad, and they kind of make their decisions based on that. But I think the overarching theme is lending itself to a potential lag in the problems in the market, is if the market is kicking the can down the road a little bit. And I think we'll revisit some of these macro issues, but right now it just looks like a domino effect is about to go off, where the Nasdaq just made an all-time high. S&P 500 is 50 points away from that. So, it's a magnet, and
Ooh, you
you
should,
kind of got to.
you know what? You should have gold bars all over since you're so bullish, dude. I'd love to see your P&L. Anyway, we're done. I gotta go. Everybody, peace. Sorry to interrupt you at the end. I got things I gotta do today. Talk to you guys. Peace. Have a good
Take
trading day.